All right, that negative trade deficit there, $77.2 billion. Michael, how does it set the tone for the weekend?
Well, I think you are, to your point on the inventory accumulation, I think you are likely seeing some front running of tariffs, whether that's showing up in wholesale or retail. We can parse that out. It wouldn't be surprising if China pushed some of those things out the door and we brought it in before tariffs hit. So I'm not surprised to see that. Longer term, the trade deficit should still continue to widen. At this weekend's meeting, we do think that there is a path for a framework agreement between the U.S. and China to at least reduce some of the immediate tension around tariffs and protectionism. I think there's incentives for both sides to do this. I'm not sure what the probability is, but I think they both want to find this path, and that's what we're looking for.
Well, is the path really first to just hold still? That is to say, no further tariffs, just to have a pause while they talk about it. Because as a practical matter, Michael, I don't think anybody's expecting an overall trade deal to come out of this dinner down in Buenos Aires.
Absolutely. I think I would interpret anything that comes out of this as likely a short-term agreement that reduces simmering tensions. It's likely to include some agreement for China to buy more of our exports, probably in the areas of aerospace and agriculture, perhaps some additional market access for service-oriented firms in the U.S. And in exchange, you'd either avoid the ramping up of tariffs to 25%, or those go into effect and will come down if certain benchmarks are hit. I think that's essentially the type of deal that might get struck. The key will be how much detail do we actually see come out of this, or is this a gentleman's agreement to execute? What we would want to see is a lot of details and actual benchmarks, and that would give us an idea of how serious the two sides are.